Well, the Midcap Index is outperforming currently 175 points on that index. We're getting some numbers coming in from TFCI. Remember, for them, the next few quarters will be more important, not this one, after the open offers come about. Adani Green has reported the numbers. Net loss has increased. This compares close to around 117 crores, which compares with a flattish sort of profit earlier. The stock's moving higher by about 5%. We'll try and get in some more details out there, but not a particularly fairly tracked stock if you must. But from the broader markets, Tata Elxsi has moved to the high point of the day. And along with that, we also have Dabur, which is surging. And Dabur currently sitting with a gain of about 2% at the high point of the day. The other stock on our radar is Welspun Corp. After posting a good set of third quarter earnings, their consolidated revenue was up around 15%. Margins too saw an improvement this quarter. We have Vipul Mathur, the MD and CEO of the company, joining us on the phone line. Thanks a lot, Vipul, for joining in. First up, if you could tell us, the first 9 months, your revenue has been closer to around 17–18%. Is this top line growth sustainable for this year? And what are your targets for the next year?
Hi, good afternoon to you. As you would have seen the numbers for this particular quarter, we reported an EBITDA of 223 crore rupees and a gross income of 2,658 crore rupees, which is 15% higher on Y-on-Y basis. On an EBITDA basis, it is 36% higher on Y-on-Y basis. And if you see our performance side of it on a quarter-on-quarter basis, from a sales perspective also, this quarter we have logged in a sales of almost 340,000 tons, which has been higher than Q1 and Q2. So, we are absolutely on the right track. And, the way it looks to us, we are looking at a further growth in our Q4 sales as well as in the numbers as well.
Okay. Hi, Mr. Mathur. Good afternoon. Your order book is what, at some 1.85 MT, right? Currently, could you break that up for us?
Yeah, hi, good afternoon. So our order book at this point of time, it stands at almost 1.65 million tons, and it is pegged at almost $2 billion. So that offers us a very, very clear visibility of next 3 to 4 quarters of performance, a very stable performance over the coming year. So, it's a very, very healthy order book to have under your belt at this point of time. On top of it, if we have to look at it, we also have, an open bid book of almost, let's say, close to 2.3 million tons, which is an active bid book. And also we have been pursuing projects almost to the extent of around in excess of 18 million tons. So if you look at the order book what we have, if you look at the bid book, active bid book what we have, and if we also look at the potential bid book what we are pursuing, it is giving us a tremendous amount of comfort that in subsequent quarters to come, we should see growth in our company.
All right, hang in there, Mr. Mathur. Meanwhile, we're getting in numbers from Cadila Health. Looks like it's a beat as far as the operational performance is concerned and the net profit. We'll try to pull in the revenue number, but net profit of 511 crores is much above our poll of 410 crores. And similar is the EBITDA, which is coming higher by about 100 crores as compared to our poll. So 840 crores compares with about 745 crores that we had in terms of a poll or expectations. Margins also high by about 200 basis points. And this compares with our poll of around 21.3%, 21.4%. The margins have come in at 23.5%. The stock, taking note of that, up around 5% as we speak. Looks like a beat on all parameters for Cadila Health. 511 crores on the bottom line. This compares with 433 crores and the EBITDA coming in at 840 crores. The stock at the high point of the day. But Mr. Mathur, if you could tell us something about your US capacity utilization. And earlier I remember you told us that going forward the margins of your US business will improve. So what was the sort of margins that you posted in your US business this quarter? What is the capacity utilization?
So if you look at our US business, US currently has an order book of almost 400,000 tons, a confirmed order book, which means that the SPIAL, which is the large diameter plant, is almost booked till the end of this year. Our small diameter plant, which is the ERW plant, is at least booked for 1 more quarter. Now, from a margin perspective, if you look at it, in this particular quarter, we have achieved an EBITDA of almost $200 plus. But on a 9 months basis, if you see, we are around $180 plus of EBITDA. Moving forward also, we are pretty much hopeful that our margins would be in the range of anything between $175 EBITDA to $200 of EBITDA per ton.
Okay, and sir, finally, what's your debt repayment plan?
So if you look at it, this quarter, as I've been always saying that our continuous focus is to reduce the debt. In this particular quarter, we have also been able to reduce the debt by almost 83 crore rupees. We have brought it down from 395 to 312. Our efforts are still ongoing to, bring it to, well, in any case, these are not big numbers either way. But nevertheless, we have our stated aim that, we have to continue monitoring and reduce our debt. So we are absolutely on track with respect to that.
All right. Thanks a lot, Mr. Mathur, for joining in and giving us all those details. Wish you good luck for the remainder of this year and the next year as well.